I usually don't make this kind of video with this kind of title. I don't want to promote blindly following ARK, and I don't want to promote using ARK Botted as a main thesis point to buy a stock. Because if you do either of those, you're really not learning anything in the process. But the reason I have this title is because today, ARK actually did buy over 1.5 million shares of CM Life Sciences, or CMLF, to make up 0.26% of ARKG, so less than 1%. And I just spoke about this one in our last video covering my new incubator portfolio. So I want to give an update on that incubator portfolio and also what I've been able to find so far on CMLF's target, Sema4, a genomic and clinical data intelligence company driven by AI and machine learning. This one looks very interesting. Let's do it. What's going on, everybody? My name is Matthew, and today we're talking all things incubator portfolio and updates on ARK's new position in CMLF. As a 10-second recap, the incubator portfolio is a portfolio full of pre-target SPACs with good management and leadership and an interesting target sector or industry. For a full explanation on this strategy, go ahead and click this video right here, and it explains why I picked all of these SPACs you're about to see. Most of my money is in long-term individual stock picks, not in SPACs. This SPAC portfolio is more of an experiment in asymmetric risk, how we can take advantage of SPAC mania, and an interesting way to hold cash. CMLF is a perfect example of why I put this portfolio together. The stock is currently trading over $27 per share after hours as I am writing this, and after it was revealed that ARK bought some for ARKG. So quickly, why did I buy this SPAC pre-target? They definitely carried a higher risk because I had to buy them at $12.67 per share, which means I could potentially lose about 20% of my money if it did drop back to $10. However, I was willing to pay the premium because its board of directors included Sean George, the co-founder and CEO of Invitae, and Emily Leproust, President and CEO of Twist Biosciences, both of which are top 15 holdings in ARKG, with Twist being at number 2 the last time I checked. They also had a sizable amount of cash in trust with about $400 million and a deadline in late 2022, so they had a great management team, a very interesting target sector in life sciences, a lot of cash, and a deadline that was pretty far out that gave them a lot of time. So with this new deal expected to close in the second quarter of 2021, what does Sema4 actually do? There are a lot of SPACs out there who are simply selling a story and talking a lot about future guidance based on management's expectations, but I do not believe that Sema4 is one of these pre-revenue hyped up SPAC targets. In fact, Sema4 has done $200 million in revenue and expects to see $500 million by 2023 while seeing gross margins double. They have more than 10 million patient genomic profiles and de-identified clinical records. In other words, they have vast amounts of data already collected. The company expects to have $500 million in cash on their balance sheet after the transaction is complete, putting them in a very strong position for future growth. The company's mission is to better diagnose, treat, and help prevent diseases by aggregating all the data that can be found on a patient's condition. Their ultimate goal is to make it so that people never get sick, because using data and machine learning predictive models, we can hopefully prevent and help combat most diseases in the future. Now, I don't invest much money into individual biotech or life sciences stocks because I am well aware that's a bit outside of my circle of competence. But I'm still very bullish on genomics, which is why I put a big chunk of cash into ARKG when I first bought the ARK funds in this video right here about over 6 months ago now. The point is, I just want to help maybe accelerate people's research on Sema4, but this is by no means a buy alert sort of video. From what I gather, the roots of Sema4 start at Mount Sinai, where the leadership now at Sema4 took Mount Sinai genetics department from 35th in the country to number 4. They started developing this idea slash kind of product that would become Sema4, but they couldn't gather enough data just at Mount Sinai to offer the best guidance from their AI and machine learning. So they wanted to bring what they were doing at Mount Sinai to the rest of the world at scale to gather more data to improve their models. They have developed something called Centrellis. The problem today is that I guess most hospitals use very basic surface level tests that have binary outcomes of either sick or not sick. But by doing this, they're creating really big, quote unquote, homogeneous population groups, when in reality, there is dramatic heterogeneity within these groups. This actually reminds me a lot of Lemonade, where they say traditional insurance basically groups us into big clumps of people based on a few data points, like, oh, you're male and under 21, so you're super risky. But among male sub 21-year-olds, there's a huge spectrum of super responsible, super irresponsible, different characteristics that are ignored due to a lack of data. Lemonade, on the other hand, actually collects roughly 1,700 data points through their 13-question survey and creates many smaller, more nuanced groups rather than just big clumps like traditional insurance. But instead of Lemonade aggregating and analyzing data from your insurance questionnaire, it's Centrellis using AI and machine learning to analyze and aggregate data from your DNA. And please do correct me in the comments below if I'm making an incorrect analogy here, but this is kind of what I'm getting. With Centrellis, they can structure clinical and genomic data, better predict disease and wellness, further individualize care, and accelerate drug discovery. From what I understand, Centrellis is basically a repository of health data gathered from hundreds of public and private databases, and Sema4 applies machine learning algos and natural language processing to that data to build predictive models. And that allows us to understand disease and wellness on a molecular, physiologic, and pathophysiologic level. I certainly had to look up the definition for that last word, again, why I invest in ARKG, so here it is, and you can pause if you want to read it. But anyways, I also found this interesting. Centrellis speeds up drug discovery by suggesting the best therapeutic intervention points, and also doing things like identifying the most appropriate patients for clinical trials. So this database, or tool, or service, or whatever you want to call it, Centrellis, it will only get smarter and more accurate as it is given more data over time. It seems like they currently specialize in reproductive health and oncology, and they also have a program looking into hereditary cancer and trying to detect susceptibility and potentially reduce risk. My next stop on the due diligence train was, of course, leadership. They had 30 different leadership roles, so we'll focus on the founder and CEO, Eric Schad. Sorry if I mispronounced your name, Eric. He has quite the resume, having worked at groups and companies such as Merck, Pacific Biosciences, and more. And he also has 400 peer-reviewed papers under his belt. It's great to see a founder-led company, and Mr. Eric has a very high 91% approval rating on Glassdoor, and Sema4 as a whole has 4.1 stars. If you read through the cons, it seems like most of them have to do with the fact that Sema4 is growing too fast and is too fast-paced, which almost seems even more bullish from an investor's standpoint. Now, as of recording, I haven't been able to find an investor presentation or pitch deck quite yet. This deal is still very fresh, but based on what I have found and what I believe I understand, and the fact that ARK did actually buy in, I'm going to be holding this one in the incubator portfolio for now. For example, how would you value this company? I'm not sure how much of Sema4 CMLF shareholders would receive, and I'm not sure how many pro forma shares outstanding there are. In other words, this is a big reminder that the market cap of CMLF is not the market cap of Sema4. I see a lot of people make this mistake when trying to value a SPAC that has a target but isn't merged yet. You need to know the pro forma shares outstanding, and usually you'll find that in the investor presentation, or sometimes if you dig through the SEC filings, and this is the one that I saw that looked like it had the most promise, but I didn't turn up with anything quite yet. As for the rest of the incubator portfolio for an update, I'm probably going to sell out of my VGAC shares, which is merging with 23andMe. I am considering putting those gains into CHFW, another life sciences SPAC trading very close to $10 a share, or NAV, NAV, net asset value. The leadership is not clearly as dazzling as CMLF's was, but it's still a very hot space right now, and I think it's showing great risk reward at this current price. Meanwhile, HAAC, a healthcare and tech play led by the leaders of Livongo and investors from General Catalyst, is up about 16% or over $15 as I record this after hours. I think this might just be a sympathy play from CMLF, but 16% is a lot, and HAAC isn't really life sciences, it's more healthcare tech, so definitely interested to see what happens here and why it happened. So make sure you go check out the full incubator portfolio video down below in the description. I'll link it down there. And remember, just buying something simply because ARK bought it and not actually having your own due diligence to back up your investment, that can be kind of dangerous. It's really hard to build conviction and have strong hands, and you don't really learn anything in the process, and the goal of this channel is to make everyone independent investors. ARK definitely presents some really great leads whenever they enter new stocks, but just try and back it up with your own research. So I am bullish slash neutral on Semaphore. I think the company and the vision and what they're going after is extremely disruptive and very, very futuristic, and something I would definitely want to be a part of as an investor. But remember, you can still be a part of this if you simply own ARKG. If you're not someone who's able to understand life sciences on a very high level, such as myself, I think it's fine to just invest in the passive ETF. If you are in the bioscience, life sciences, tech kind of space, then I would definitely suggest you look into this one deeper because it's really fascinating. Also, I won't be putting any more cash into the incubator portfolio, so I'm really excited to see where this one can go, how this strategy will work out over the longer term. And if you want updates on this portfolio, make sure you subscribe to see how this strategy plays out. If you found any value in this video, and I hope you did, please make sure to hit that like button, subscribe, and check out a quote of the day. You might just learn something. Make sure to follow me on Instagram for daily posts about my portfolio, stocks I'm watching, and all that good stuff. And if you're watching at this point in the video, you are the real MVP. Don't forget your peace and thank yous.